So this is weekly commentary 59. So from the previous weekly commentary, we had these relatively equal highs from last Wednesday and Thursday marked out, and we ran it, and then we focus our attention to this volume imbalance, and then we hit that, and now we're back into this bearish order block. Now, why is this a bearish order block? You see that run on stops, right? Create a high here, that displacement create a little volume imbalance here, and this up close candle before the displacement lower, that's your bearish order block. Now, price traded up into there. Forget this candle, it's a glitch on TradingView right now. It's just duplicated Friday's candle, daily candle for some reason. When Monday opens, this will probably, fix itself. Now, I want to still favor taking short DXY trades, which will correspond to, long Euro USD and long GBP USD trades. Now, I want to work my way to this low and ultimately get down to this low as well. I don't want to see this up close candle getting traded above, we have that rejection block. Essentially, I want to see this wick stay intact. I don't want to see us breach that level. Now, if you go to the FX calendar, Monday for, Europe, we have a bank holiday. Tuesday is pretty lackluster with one orange FOMC speaker. Now, Wednesday, Thursday, and Friday have the news drivers, right? With Wednesday being CPI and a lot of bank talk for pound. So where do you think that the expansion of that weekly candle, where do you think that candle's going to start expanding, right? It's going to be the middle and the end of the week. This is how you use the economic calendar. Where do you think the weekly candle is going to begin its expansion? Where's the reason for it to, start expanding? Now, when you have that, all you're doing is this. Where is price trading to on the PDRA matrix, right? Before the news event. So now we're inside this order block. We understand that, right? I want to see price, Monday could be a bit slow. Tuesday and Wednesday, I'd favor, working our way to this sell side liquidity pool. Now, when you have Wednesday, Thursday, Friday being, all three news drivers, say Wednesday takes this sell side liquidity pool out. Thursday can be an up day retracement, and Friday can continue. It won't always be all one way. Remember, whenever you take a level of sell side liquidity, expect an up candle to form because those sell stops get paired with, smart money buys, which can lead to an up candle. It doesn't mean that it's gonna eternally reverse, but you'd get a retracement. Every single time you break a low, you get a retracement. Every single time you break a high, expect retracement, especially if we break down here and we get a fair value gap, right? Whenever you break a low and there's a fair value gap bearish, expect that retracement to the low and to continue on. Likewise for bullish, right? Now, if we go to GBP USD, right, and we look at this consolidation, and now we're above it, right? This could be a power of three framework right here. Now, of course, we can get another leg higher, but this is the territory where you start to hunt your bearish market structure shifts. Likewise for Euro, from the previous weekly commentary, we had this, imbalance level here, and we institutional order for entry drill worked our way higher. Now, when we got above this down candle, this becomes your bullish order block. You see how we found support in that, right? I don't want to see this down candle get, breached. Likewise, I don't want to see this low of the institutional order flow entry drill candle get breached. Work your way to this rejection block and this level of buy side liquidity, and then wait when you're above this buy side liquidity pool, right? Likewise, when you get down to here and, working your way to this sell side liquidity pool and this one, you want to kind of wait and evaluate yourself, right? Now, talking about CPI, this is the bond market. If I remove this because there's a lot of clutter on it, you see this has been in quite a slow, choppy, consolidation. Likewise, why the dollar has been quite, lackluster. Compare all these big candles, clear expansions to, how we're just slowly moving downwards here. The reason is because the yield market is consolidated, right? Now, we keep taking sell side liquidity, right? You see how we took it here, came up, took it here, came up. We have this, imbalance here, reclaimed fair value gaps here. We could see a move up higher here. But remember, the candles aren't always candle for candle the same when we look at this chart to the DXY. The reason why I'm favoring this, right, a run on the low and then see potential market structure shift is purely because the bonds here, if you get your fib out from here to here, you can do it together. If I remove these drawings. This low to this high. Now, this is internal liquidity. Why? Because this low and this is a new higher than here. We're inside and we're bouncing around this range. So these lows and highs are all internal liquidity. You see how is this bouncing around the 50% and discount, right? And we had all these up candles and we've kind of filled that in. See all of these up candles together as one big fair value gap. You see how we've kind of come to the 50% of that, right? And we've kind of traded up into this old, uh, bullish breaker, this high, lower low, higher high, right? That sets up a stage for a, you know, bullish continuation for the US 10-year. So what does that tell you? That these sweeps on the DXY could be led to offset accumulation for higher prices. I'd still favor this, this low at least to get taken out, given that we're in this bearish daily order block. So I'd only want to select out short DXY trades, which will correspond to long Euro USD trades up until here, and long, GBP USD trades as well. Euro GBP is quite consolidated. I'd favor, given that we printed down candle and we swept all of these previous days highs, lower uh, Euro GBP shows that there's underlying strength in the pound, so it's probably favorable to trade, GBP USD. Given that we're in this traded down to this bearish bullish order block, sorry, you can find longs and then use this as a buy side liquidity pool target to, you know, work towards on the intraday level. Euro USD is also not as bad. It's just a bit more choppy, but perhaps the longs on GBP USD will be better. Now for US 10-year, we mentioned the market maker buy model, how we saw us come down here, right? We had fair value gaps here, institutional order flow entry draw. Work your way to this high first, and then this high. Now, the main thing I wanted to talk about in this weekly commentary with you guys is what I mentioned in the previous weekly report before this, right? The idea of a direction, a stage, and an entry. Now, the stage and the entry is what people conflate together, and they think that they're the same thing, but they're not. So we need to make a justification and a distinction, if you want to call it that. That's probably the better word, of what the stage and the entry is. So I'd rather just, clarify it on this weekly commentary so you can hear it instead of read it on the weekly report. So the three things we want is a direction, stage, and of course an entry. So the direction, we want every single day as a trader, we should try to sieve out to select trades in one direction over the other. Going into the day and taking whatever sells and longs, the daily candle and the weekly candles if you swing trade is always going to favor one way over the other in this expansion, right? For example, this institutional order flow entry draw here, right? You can expect an open, low, high, close delivery here. Where in this daily candle was shorts, more favorable or was longs? Look at this, looking at the candle, small wick, big body compared to the wick, right? Clearly longs were favorable. So if you were trying to short in that day, it's going to be hard and there's going to be no range to really catch if you're trying to short. So the first thing you want to do is try and sieve out a direction. Now, if you're scalping, you can use the 4-hour direction and the 1-hour candles direction. Forget that this is a daily chart. If this was even a 1-hour chart, where would you expect the next 1-hour candle to point towards? This buy side liquidity pool here, and you work your way above here, right? So then you'd only frame and look for on the 5-minute chart, you'd only look for 5-minute models. Now that then takes us on to the next thing, the stage slash the model. The stage is this. What sets the stage for you to entertain your direction? So you have a direction. Now, do you just blindly enter upon, your direction? You just click buy as price is going up? No. You wait for a stage or a model. Now, this is where chapter 4 comes in. How do you want to skin the cat? There is no wrong way. Now, I try to push you guys to the market maker model slash power of 3. So, for example, you can wait for the accumulation, manipulation lower, and then go higher, or you can wait for price to, offer you a market maker buy model, essentially accumulation, right? Trade down lower, smart money reversal, market structure shift, right? You need to find a stage, right? Your stage needs to have clear characteristics. Runs on stops on the opposing side, right? Run stops, offset accumulation if you're trying to get long. That's your model. That's your stage that you're trying to find. You need to find your stage or your model that is going to be in line with your direction. And then the last thing that you want is this, your entry. People mix up the entry with the stage and the model. They think that the market maker model or the Power 3 is an entry. It's not an entry, it's a stage or a model. The entry is a specific PD array inside of your model slash stage. For example, an institutional order flow entry drill could be your entry model inside of your stage. The a mitigation block, the retracement to order block, the an optimal trade entry from a high to a low or low to a high, given if it's a buy or sell model, that's your entry inside of your stage. So what you guys need to do is this in your plans. Have a way, and this is all the plan needs to include for your technical side. Have a way to understand how to dictate your direction. Now, this mentorship, we go over direction a lot. Every single weekly commentary, you guys have nearly 60 of them, and we dictate direction pretty well. And I teach you guys how to do it. Chapter 6, lesson 1 is probably the most powerful way to dictate your, you know, your direction. Now, once you have a direction, and this is the key right here, you need to only select trades in line with your direction. If you are bullish, it's going to give you so much clarity, because if you're bullish, and not this weekly report, the one before it, I remember it was Thursday, the section on Thursday and Friday. If you compare it, Thursday we were looking for longs. Now no long was offered. No stage for longs was offered, because this is what will happen. If you're only looking for longs and you got the direction wrong, for example, you probably won't find a stage for a bullish trade. Therefore, you won't find your bullish entry model. You see my point? You see that how it saves you? Yes, cool, you might have got the direction wrong, but you didn't meet any criteria for your stage or your entry to find a trade, and that will save you. Yes, you didn't take a trade, but you didn't, more importantly, you didn't take a steady loss, right? Now, once you've got your direction, all you need to do is find your stage in line with your direction. The stage and the entry is, if you want to practice that, it's all pattern recognition. You need to get very good at understanding your stage. You need to be able to spot your stage very quickly. Once you spot your stage, your entry is the easiest part. The entry is the absolute easiest part. The stage is harder to identify than the entry all the time. Sometimes it's hard to understand you're in a market maker buy or sell model. Sometimes it's hard to understand that you're in a power of three. The entry is easy. Everyone at this point in the mentorship, given that you're being here for a few months and you're up to date, fair value gaps, order blocks, mitigation blocks, they should be like second nature to you to identify. It's just the stage you guys need to be able to identify very, fast and easily. And then the entry fair value gap mitigation block is the absolute easiest thing. Make it as repetitive as possible. Focus on one or two PD arrays to enter. Don't try and enter upon all of them, because that is what yields consistency. You'll see similar risk to rewards in your entry, and do it for some time first. Right, this is how you yield consistency. If one day you take an order block, the next day you take a rejection block, you're not gonna find that comfort, right? Because the same comfort you're going to have on entering a fair value gap, you probably won't have that on a rejection block. And your trading becomes a lot harder than it needs to be, right? So those are things to consider. For Bitcoin, you guys ask me, and I say this market is consolidated. It's, you see, when we see wiki candles like this, we call it time distortion. This doesn't show price moving in the market. This just shows time printing in the market, because the candles show time and price. Remember that. Someone asked me about ETH. They asked me where do I think I see it going, and focus the open of this candle, 21, around 2150, 2149. You can find a possible move there, break this high into this level of imbalance into here, right? The open here, this candle's open, the Monday the 16th of May. But yeah, that's going to be it for this week's commentary. Really take a note of the stage, direction, and entry. It's as simple as that. Those three criteria make it very easy, right? You need a direction, a stage that's going to be in line, which is usually your model, and then enter upon your model. And the entry, make it the same every time. It yields consistency. Now, you're not going to get it every single day. That's fine. That's totally fine. Some weeks it barely may come up, but then you're going to get times like, there's always two sides of the coin. There's going to be times where you could see it every day and you're taking it every day for that week and you just had a very, very good week, right? So those are all things to consider. So just to reiterate before we leave, daily time frame in a bearish order block, focus your way down to this sell side liquidity pool. bullish order block, buy side liquidity pool, bullish order block, buy side liquidity pool, rejection block, and buy side liquidity pool. Um, for Wednesday, the CPI, don't try and find a trade right before CPI. If you can find something in London, perhaps, that's fine. Then if you find something in London, forget New York, right? CPI afterwards, you can possibly hunt, given half an hour after CPI. If you can align yourself well before CPI, totally fine. But never enter upon. You don't want to be close to where price is 15 or 5 minutes before a news event because something like CPI will take out both sides. And if you're close to where price is right now and you haven't aligned yourself, for example, if you could have aligned yourself in this candle before this candle having news, you see how here you're far away from the news open. But now if you're here, right, and the news open is in the next candle, the news is probably going to wipe you out. This is the reason you try to align yourself before the news event. So consider that as well. So that's going to be it for this week's commentary. And until the next time, and I'll see you guys in the next one.